All right, there we go. Welcome to our weekly training. Buckle up, buttercups, because look, we're about to drop some serious value bombs that's going to help catapult you into action instead of being stuck where you are right now. When you guys think about acquiring multifamily properties, do you ever get stuck on, like, how am I going to fund my deals? It's totally common. Frankly, it's just one of the most common chokeholds that keeps investors stuck in a pattern of inaction, self-doubt, and ultimately no results. So today we're going to demonstrate what our process is for creating unlimited capital without the fear or awkwardness that most new investors face, and that it's just a normal part of the journey. All right, here we go. All right, so why learn how to raise capital, right? What's the big deal? And why learn our system for creating unlimited capital? So we've noticed that nearly all investors get hung up on where the money is going to come from for their deals, right? So much so that they never actually start investing, or they eventually give up on their path to mastering apartment investing, which means they give up on their dreams and they return to the grind that does not fulfill them or provide the freedom that they long for. And it doesn't have to be that way. So by the way, if you're watching this on a replay, Facebook or anywhere else, put hashtag replay in the comments that we know that you're here. All right, so at the beginning of this training, I mentioned that we have a system for raising capital, right? And today we're going to share our systemized approach to finding investors for your deals, nurturing them and matching the right investor to the right kind of deal so that you can create a lifetime of capital for your future deals and live a life of hope and excitement and growth and purpose, right? Everything isn't just about money. There's about so much more than that. And at the beginning of the training, I mentioned our process for creating unlimited capital without the fear or awkwardness that new investors face, right? So there are 3 pillars, right, to raising capital for your deals. 1, meeting potential investors. 2, nurturing those investors over time. And 3, leading with service by matching the right investor to the right deal. So knowing this to be true, we need to have systems in place on how to connect with and nurture potential investors so that when we do have a deal, we feel confident and certain knowing that we have a database of investors that we can go to. You guys, this is not an overnight process. So it's important that you get started today. It takes time to create this level of investors, right? So let's do a quick example so you can wrap your mind around this. We teach our unlimited capital raising system for students in the Remote Multifamily Investing Academy. Now, many of them have built relationships within the academy by attending weekly calls and networking and just getting to know each other. And then they end up doing deals together. It's just a super natural thing that happens. They develop this family feeling, which makes doing deals together just exciting. Like they're all growing together and they have that sense of family and community. So many new investors just long for that. So for them, it's actually easier for raising capital cold, or it's easier than raising the capital just like from people that you've not met before. But they're learning that as well, just like you, so that they can get into larger and larger deals as they build their confidence with the smaller joint venture deals that they're doing. So I'm going to show you a deal that our students just literally last month, it's not even been a month, it's been a couple of weeks since they closed it, so that you can see this in action and start to see how this is possible for you to do. All right. And anybody can do this. You can do this. All right. So this is Liz and Rachel, and they just closed at the end of August, a 34-unit deal in Tennessee. So both Liz and Rachel are active in networking and social media and letting people know what they're working on and working their real estate business. So that's a post on Facebook. Like they're purposely letting people know what they're working on. All right. And then once they got their 34-unit under contract, then they turned to their database of investors that they'd been building and nurturing for the past 12 months and reached out, letting those relationships know that there was an opportunity to do a joint venture on this deal. When you're new, getting a deal under contract it's terrifying, frankly, and not necessarily because you're afraid of the deal itself. It's usually because you're afraid of not being able to raise the capital for the deal. And I think on this one, the raise was somewhere between $450,000 and $500,000, not a small amount of money. All right. So they had ended up bringing in 4 different JV partners on the deal, three of whom they met in the academy. And then the 4th was a friend from Liz's job in corporate America, or her former job. She doesn't work there anymore. She retired. She retired from that job. All right. So, okay, I had a feeling because I was like, I don't think everybody knows this. Obviously, people in the academy do because we've been teaching them. But if you're a little bit newer or just haven't come across this yet, it's a little bit of a mystery. So I want you to get out your calendars right now, right meow, and I want you to mark the date of October 13th. All right, October 13th. Actually, is that a Friday? I thought the 12th was a Wednesday. Anyway, it's that Friday. Now I'm wondering if it's the 13th or the 14th, but that Friday, let's call it October 13th. Oh, is Friday the 13th? Ooh. All right. And so it's going to be at 1 p.m. Pacific, 4 p.m. Eastern. I want you to mark your calendars. That is the day that I'm going to go ahead and I'm going to create a full training specifically on joint venture versus syndication. So you really start to pull all these pieces together. All right. So you can feel more confident in everything that you're doing. All right. We'll get back to the 34 unit. All right. Let's get back to it. How it got funded and closed, leaving Liz and Rachel beaming with pride and excitement. These ladies are so flippin' exciting. This is their second deal in 8 months. The first was a 24 unit. Now they got a 34 unit. And what is the process that we taught them that Liz and Rachel implemented to raise the money that they needed for that deal? So raising capital, it's a people business. It's really about connecting with people, caring about people, and wanting to create win-win situations where you win by funding your deals. They win by getting to put their money to work for a return. You are breathing a sigh of relief that the deal's funded. They are no longer feeling sick to their stomach, recognizing that their money isn't wasting away from inflation, just sitting in the bank account, making nothing. And really, worse than that, it really losing value, especially when we're in a time of inflation. And I want you to think about for a minute, all the places that you interact with people, the people in your everyday life, the people that you work with, the people that you meet at your kids' sporting events, the people that you meet maybe at the gym, the people that are connected to you through social media, and the people you meet through Zoom or in person at networking events. Like you can start feeling excited because once you start thinking of all these places that you interact with people, you realize, or you start thinking this way, you're going to realize you know more people than you realize. And look, not every person that you meet is interested in investing in real estate, but you're going to find over the years that most people who have money in savings or in retirement need to be able to put that money to work in order to build any kind of real wealth for them and their families, right? And most people are already familiar with real estate investing, right? And it's well known as one of the safest, most predictable investments. So it's not like you really have to convince people of some new unproven concept. It's already proven, and pretty much everybody knows about real estate. And there's just tons of people who they want to get started in real estate, but they don't know how. And that leaves them, frankly, feeling disempowered and worried about the future. Have you ever thought about the future and started to freak out a little, realizing that you need to do something different than just rely on your 401k or government Social Security? So type yes in the chat if you know what I'm talking about, if you understand that feeling that people might be having. Yeah, it's scary to think I'm not doing anything for my future. So as much as you know that feeling, oh, Nina, hey, you know that feeling. So once you start to understand that, as much as you get that gut feeling like, God, I have to take care of my future, other people have that too. The difference is you're here on a Friday learning, and they don't know about this, or they're not inclined to go and learn, but they still have that sickening feeling in their stomach, like, I got to do something. All right. One other thing. Have you ever met someone that you were talking to, you're talking about real estate, and they say, God, I've really always wanted to do that? Put a 1 in the chat. If you've ever been talking to anyone and they're like, oh yeah, I've always wanted to do that. Lorraine, yep. Lori, yeah. The thing I want you guys to realize, because you're here learning, you're here growing, you're going to do this, or many of you are already doing it. You're already part of our academy. You are the foot in the door. You are their promise of hope for their future. I want you to make that realization. You are the one providing them an incredible opportunity for people to stop wanting to invest and actually be able to do it. You are the one helping to provide a feeling of hope and security that they don't know how to get without you providing a vehicle for them to be able to do that. So when you shift your mindset from the disempowering, fear-based one of, I need money for my deals, right? That is not a good feeling. Or, oh, I'm asking people for money. That's really uncomfortable. Right? That's a very different story than an empowering and confidence building. I'm providing an opportunity for people to move their money into a place where they can put it to work and make more money instead of having their money rot away in a savings account, losing value every month to inflation. Like, you're leading from a place of confidence, strength, and service instead of fear and scarcity. People are busy. They have money, but they don't have time to learn how to invest. And that is a gut-wrenching feeling for people. You are the Golden Gate Bridge for them. So you have the people that you know, the people you meet, the people you interact on social media. Like, how do you create a systemized process to track everyone and nurture them until the time that you have a deal that's a good fit for them? That's what we're going to be talking about. So you need to have a database that keeps track of their name, email address, phone number, how and when you met them. That becomes very important once you get to the point where you're doing syndication deals. So you want to start keeping track of that information now. And when we meet on October 13th, I will go deep into understanding why and which kinds of deals you have to have a pre-existing relationship for. You want to find out, like, what kind of investing do they prefer? Is it joint venture? Or maybe is it being a limited partner into syndication? Or maybe is it being a private money lender? Some people will be open to more than one of those options. Like, Jen and I have an investor colleague that has money into one of our syndication deals. And they're also a private lender. They have a first mortgage on a quad that we own, right? Just a small property. And they have, money into our 96 unit deal as a syndication. So, and they would be open if we brought a joint venture. So they actually want all three of them. But sometimes you're going to find when you're talking to people that they're very clear. There's only one thing they want. Like, I have a colleague named Alexis. And when I talk to him and I bring up syndication or private lending, he's like, no. All I want to do is a joint venture where we're both in it. We're both working it together. And I'm like, okay, no problem. So when you find out what they want, you can be more specific about bringing the deals to them that are going to make sense for them. And the thing is, you need to ask them, what amount of capital are they comfortable putting into the right deal? Am I scaring you? Like, don't freak out. I'm not asking how much money do you have. That's a very different question. I mean, I might as well ask them how much they weigh or how old they are. Right? Oh my God. Right. You know what I'm talking about, don't you? Like, the unaskable questions of society. You can breathe a sigh of relief. You're just asking how much money they're comfortable investing in the right deal. You're not asking how much money they have. Now, why do we ask that question? In the chat, what do you guys think? Why do you think we ask the question, how much are they comfortable investing in the right deal? Or did I put you guys all to sleep in the hammock, as Jen calls it? Why do you think we ask the question, how much money are you comfortable investing in the right deal? No one wants to put yourself out there. All right. Okay, they want to test you out first. Potentially. So they don't come back to us. So they do not come back to us. So you know what deals to put them in. That's it, Lorene. Just to see if we are serious. It really asks you for money back. So here's what we're coming down to here. To determine what to shop for. Ryan, correct? Determine what to shop for, sort of. And Lorraine, you know what deals to put them in. Let me give you an example with numbers. Let's say you're trying to raise $300,000. Right? And you want to do a joint venture. And I'll explain more about this in a couple of weeks for those of you who don't understand this part. But when you're doing a joint venture, you want to keep the number of partners you have low. You don't want to have, 15 partners, because then at that point, it's not a joint venture anymore. So let's just say you're trying to raise $300,000. You want to do a joint venture and you want to keep your number of partners to 4. All right. And let's say you ask that question and someone says $25,000. You know that person probably isn't going to be a candidate for that particular deal. You're not trying to torture them by having them think they're finally going to get into a real estate deal, just to find out that they actually can't. In that scenario, you're going to need partners who can put in a higher amount of money in order to keep the number of partners down. And if you understand joint ventures, then you understand why we want to keep the number of partners to just a few. All right. And then, like I said, we'll dig into it on October 13th for those of you who are a little bit newer. Okay. So back to our systemized approach to make you feel more confident in the entire process. Once you've established your database, even if there's only 10 people in it, like everybody starts somewhere. I don't care if there's 3 people in it. You want to start nurturing those investors so you can start building a group of investors that will allow you to feel confident when you have a deal. So how do we do that? By leveraging technology. So in our most recent WowCon event, this is just not even a month ago, it was 3 weeks ago, our students went through the process of setting up their email CRMs through MailChimp so that they could automate the process of outreach and nurturing. And this allows them to keep in touch with all of their contacts, but it shaves off like 90% of the time that it takes to do it manually, which allows them to have more time to spend with their families or evaluating deals or doing the things that they want to do, and to feel like they're able to finally leverage technology to create more time in their lives. And look, if you're just getting started, then just set a goal to send out an email once a month, like a monthly email. And eventually get to the point where you're sending out an email every other week. And ultimately, you want to get to a point where you're sending out a weekly email. And the purpose of doing that is to keep your investors warm and close so that when you have a deal, they feel like they've been hearing from you all along, which allows them to feel more comfortable with the relationship and warmer as far as getting them to want to do that deal with you. So there's all sorts of different types of emails that you can send. And I'll give you a couple of examples. You can do educational emails. You could do case studies. If you're active in real estate, you could do a case study of your own deal. If you don't have a deal yet, you could do a case study of someone else that you know. People like to read stories of people actually doing real estate. You can do emails that talk about your personal journey stories or something that you struggled with and overcame. Deals that you're analyzing, market updates, really anything that would be interesting for them to read and keep you top of mind. You don't want them to forget about you or forget that you exist, right? And the same goes with establishing a social media posting schedule. Here's what it ultimately comes down to: consistency and time. When you're getting started, if you can do your first deal as, let's say, 5 to 10 units, a 5 to 10 unit deal, it's probably not going to take a ton of capital, right? So your list doesn't have to be so large, which is nice. That's why sometimes it's nice to start with an apartment building that's, it's not 50 or 100 units. You have to be able to raise a lot of capital for properties of that size. And you'll get to that. It's a natural progression. You get to that in time. But when you don't have a huge list and you don't have a ton of capital yourself, starting with a smaller apartment building is going to allow you to get in and get it funded with a smaller group of people. And doesn't that make you feel more confident in your ability to actually do this? If you think about it, as you grow and scale into larger deals, you're going to want your list of investors to grow alongside you so that you can maintain that feeling of complete confidence as you're making offers and tying up deals. If you think about it, if you went right now to go write an offer on a property and you had no contacts or you have like a very small list and you're going to have to raise $1 million, how likely are you going to be to actually submit that offer? Probably not that confident. And you might end up pulling back as a result. So starting with a small list, nurturing them, and then growing that list is going to end up paying back huge in your future because it's what allows you to scale. By networking in person and consistently posting on social media, adding people to your database and nurturing them through email, you're setting yourself up to fund all of your deals as you grow and scale. And doesn't that feel amazing? Like looking at the future and knowing that that is your future. And guys, like this is literally just the tip of the iceberg. There's so much opportunity to make big money with multifamily so that you can live a life that's exciting and meaningful to you. When you're doing joint ventures and syndication, there is another opportunity besides the cash flow, besides the equity. There's other opportunities to earn fees for being the one to bring the deal and operate the deal. So I want to talk a little bit about that. The 3 most common fees are acquisition fees, disposition fees, and asset management fees. And all of these range between 1% and 3%. So with acquisition fees, Let's say that it's a 3% acquisition fee. It's 3% of the purchase price, right? And when, actually, I think that might be on another slide, so let me not say it yet. Disposition fee, let's say disposition fee is 2%. The disposition fee is paid when the property sells. So let's say that we were selling it for $2 million. The disposition fee of 2% would be $40,000. So on top of all of the equity, on top of all the cash flow, you can get that acquisition fee. And the acquisition fee is day one. The disposition fee is when you sell the property. And then the asset management fee, I think the most common number that I see is 2%. And the asset management fee is based on the gross income of the property. So every month as you're bringing in revenue, you're getting an additional amount on top of the cash flow. You are the one that's adding to your family's wealth. You're the one creating generational wealth. And you're literally changing the financial future of your entire family. All right, I will go ahead and talk about it. On Liz and Rachel's 34 unit, they're getting not only the cash flow and equity from the deal, which are both substantial, but they also got an acquisition fee. They did a 3% acquisition fee. And the day after they closed, they had earned $35,000 fee. Day one, right? And when they sell the property, assuming it sells for $2 million, that's what the projection is, their 5-year projection, they'll make a disposition fee of $40,000, plus all the cash flow, plus all the equity. And the acquisition fee, like, they made it the day after they closed. Like, talk about large lumps of cash flow. And then our students, at least one of which is here, I saw Janice here, but our students, Brad, Andy, and Janice, they closed on the 96 unit deal. That had an acquisition fee of 2% on a $9.5 million purchase. So that was a $190,000 acquisition fee. And the estimated disposition fee when they sell their 5-year projection, when it's $13.5 million projected sale price, it's going to be $270,000. Like, this is life-changing money. And it's funny because people say that it takes money to make money. They're wrong. It takes knowledge to make money. And I just want you to know that if you'll take the time to learn this valuable skill, you will literally set yourself up for life. And this strategy is exactly what we teach our students inside our academy, where we provide organized information and we remove a huge amount of their fear by holding their hand through their deals. And with our guidance, they get to experience speed of implementation while they're building and managing their portfolios, developing confidence, creating credibility for themselves with brokers and lenders and joint venture partners and investors. You know, sometimes we know what we want, yet you don't know how to get there. And it can feel overwhelming and sometimes embarrassing to ask for help or just to get the clarity that you need to get into action. So I just wanted to let you guys know we are offering a free clarity call with one of our junior coaches, Teresa. She's ready to meet with you and discuss your goals. Where are you currently at, including your current approach, so that she can help you identify the resources that you may not realize are at your fingertips and just give you clarity on the next steps for you. And if you see that, if you see value in that, please take us up on that offer to chat with someone on the inside who was once where you are now. Right? Teresa was a student of ours. She came to us having no units outside her market, no rental units. You know, at this point, she was able to sell her business, retire, and she's a full-time real estate investor, and she's willing to just chat with you guys and help you. All right. So I'd say take us up on that. Let her help you develop your roadmap. All right. Oh, and we have something for you guys. So if you need similar help understanding how to manage your whole portfolio as a world-class operator, we actually have a detailed training that is called Multifamily as a Business. And we're going to give that to you guys for free. So if you're in the Zoom room with us, we're going to drop that link in the chat. You got that, Jen? Oh, fantastic. All right. So those of you who are here, you can click on that, and that way it'll be on your computer ready to go, or you can copy and paste the link so you can watch it later. That is a fantastic training to really help you understand how all of the pieces fit together. This is a training that we created to show you how we operate our multifamily business, so you can start to see how you're going to operate yours. It's one thing to get across the finish line for that first deal. Man, we specialize in that. But the other thing we specialize is after you get that first deal is teaching you how to build an actual scalable real estate investing business with multifamily. For those of you who are watching live on social media, or you're watching the replay in our Facebook group, or if you're watching the replay anywhere else, if you drop the words world class in the comments, we will drop the link to the training as a response to your comment so that you can get access to the training right away and you can get into action. All right, so if you're on the replay, drop world class. If you're live in the Zoom with us, you can grab that link right there and get that ready so you can watch that and enjoy it. All right. And speaking of taking action, I know some of you came late. That's okay. For those who are here on time, you got to see a fun video of what WowCon is. But anyway, speaking of taking action, if you identify as an action taker and recognize that immersion is the best way to apply what you learn and how to get results, then you should 100% be planning on attending our in-person WowCon. All right, WowCon, WOW stands for Warriors of Wealth. All right, Warriors of Wealth Conference. It's going to be November 3rd through 5th in Orlando. Now, the day we announced it to our students, because we announced it to our students first so they could get it booked, we had, 23? We had 23 registrants on day one. We are currently 50% at capacity. So we have a room that has a limited size this time. So we are not going to have a huge amount of seats for the public, and our students have, first right. So, but now it's open. So if you're interested in attending that, you can go to wowcon.com, and Jen put the link in the chat. The Warriors of Wealth Conference is where our students come to learn advanced strategies for investing. Plus, they get access to our network of key partners that provide lending, business credit, and fundraising. In addition, what we're going to be teaching at this WowCon is seller financing. Ooh boy, seller financing. Why is that important? As you guys know, we are in an interest rate environment right now that makes a lot of deals too skinny and just really not worth it. Like the numbers won't add up. They won't work. Up until about 18 months ago, we had been in a very, very long period of crazy low interest rates. So any multifamily owners that got a loan anytime in the past 5 years or so, they probably have fantastic rates and terms. So understanding how to offer and structure seller financing deals can help you take those deals that really don't pencil when you're using conventional financing and turn them into incredible deals, utilizing the seller's low interest rates in order to create a huge win-win opportunity, not just for you, but for them as well. So this is a skill that you're going to want to master for the next several years. And I'll tell you, like seller financing, that 96 unit deal that I talked about that our students did, Jen and I are partners with them in that deal. That deal was done as a seller finance deal. And the way it was structured is what made the deal not just work, but it's a great deal. If we had to take that the route of conventional financing, the deal never would have happened. It wouldn't have penciled out. Right? So seller financing is one of the absolute most powerful tools that you can leverage and learn for the next several years until the interest rates go back down by quite a bit. So seller financing is here to stay for at least several years. Anyway, so register for WowCon now. We already have 46, we're actually past 50%. We have 46 registrants since announcing it. This was just a week and a half ago. All right. There's only 80 total spots. So, and that's based on the space that we have. So we anticipated having 40 spots for our student and 40 spots for the public, but we already have more of our students registering because they were either at the one in August and they were blown away, or they heard about how incredible it was from their other students in our program. So we're not going to have as many slots for the public. So if you want to be at the most incredible event you've ever experienced with other people that are all about multifamily investing and all about lifting each other up and supporting each other and just fire networking, you must make this a priority. You do not want to miss it. Anyway, I hope this was helpful to you guys. Next week, same time, same place, or if you're watching this on the replay, then it's Fridays at 1 p.m. Pacific, 4 p.m. Eastern. We're going to do another live training for you guys. Jen's going to do that training. And that one's on asset management, right? We're going to do that one on asset management, which is one of the most profitable skills you can learn in this business. It's not the sexiest one, but it's the one that will pay you forever. Anyway, thank you guys so much for being here. Thank you for being part of our community. Let us know how we can help and support you as you're on this journey. And for those of you who are coming to WowCon, I can't wait to see you there in person. All right. Have a good one, guys.